All right. Thanks so much for joining me once again. And I'm glad you joined me today. In case you're not able to join in and you've accessed the recording, I hope this is helpful, and I hope you're well. And I hope you're making progress when it comes to your revisions, as well as your study for CPA paper 1. So like other days that we usually meet, I usually use this opportunity to hear from you, how especially you're progressing on your study, but also I'm able to take on some questions from your study. And then I'm also able to share with you and give more highlights on certain areas that I believe that are helpful to you. So again, I'll try to open the door, the floor for people to be able to share in terms of questions, share how they're progressing, and then I can be able to pick up from there in terms of support, giving you some support. So I think the last classes I had shared with you various videos, and those videos included videos for vast topics. I don't know if we have some people who have gone through all the videos, or you have gone through maybe by just posting on in the chat box. What is the last video you went through when it comes to financial accounting? Okay, Stella says some videos failed to open. I think Stella, you've shared that feedback before. And we're trying to look at some of the videos, but it is something that we can also try to interrogate more, just find out why some of the videos may not be opening as per se. Maybe I could also hear from other people. Okay, some of the videos were not opening. I think that is true. There are also videos on revision, because I had shared 2 sets of videos. We had some videos that were on revision and videos on normal classes. So I don't know if some of you have taken some time to also look at the revision videos. Anyone has looked at the revision videos? Or what is the last video you watched? You just type the last video you watched in the chat box. So somebody says last went through the bank reconciliation video. What about other people? Okay. Bank reconciliation. I see most people here last went through bank reconciliation, which was the last video that we basically shared as a group. I don't seem to see other videos after that. Okay, I've already gotten to hear from Michelle and Justine. So I don't know if the rest of the other people have also gone through some of these videos, or maybe you were challenged. Nasa Stella, were you able to go through bank reconciliation as well? Or was it part of the videos that didn't open? Stella? Okay, Stella says she also went through bank reconciliation. So I hope that right now you have some confidence when it comes to bank reconciliation. Okay, so she also went through bank reconciliation. Just try to open here syllabus. Okay, I don't know about the rest, but I believe that most of us have gone through bank reconciliation, at least. But there are also other videos that are also shared. I don't know if for those that have gone through bank reconciliation as the last video, if all of you had a similar challenge with what Stella had last time. All right, sorry, network had gotten me off, but yeah, we can be able to pick up from there. So I hope we don't have any challenges because I've not yet gotten any challenges coming through. So we can try to, if change browser, use Google browser, it works. So I think maybe that you use the Google Chrome. I think some videos a bit selective on the browser. So you can be able to pick up from what Michelle tries to share here. Some videos you can be able to use Google Chrome. All right, so friends, I should say, if I was to say that we out of time, that would be an understatement of what basically we should be able to do. But I would say that we need to up our game when it comes to our progress, because time is running very, very fast. And we just want to make sure that at least we able to cover. Okay, and end of year, say that recording doesn't exist. End of year adjustments. Yeah, there was one video that I'm very certain gave that. For the rest, I may it was actually the one of end of year adjustment. One video that had that challenge, which I'll be able to just take you through. Maybe I think the video might have been corrupted, so it's not there. But nevertheless, we can be able to look at the content altogether. Yes, part one of that video. Just need to confirm on what area the areas that you went through in part two that are not in part one, that may be helpful to you as well. So I'm just trying to get my syllabus here so that we can try to just have a look at it. I believe that all of us right now have the CPS syllabus. The CBS syllabus has, of course, it gives you an understanding of all what is required when it comes to a paper. Just a moment. Okay, I've shared with you the syllabus, just in case you don't have that syllabus. It's just a check for you to be able to check yourself in terms of what progress you're making when it comes to your study. Given that we leverage so much on the videos, you should be able to create time and make progress as an individual to ensure that you're not left behind. Okay. So there are several topics that you have to cover, and the videos try to give you about 80%, and some of those are the areas that I try to fill even as we go through these different notes. So part 1, part 2. Okay, part 1 of end of year adjustment had an issue, but part 2 worked. I hope the rest of the other also worked. Have we gone through the cash book? I think I'd also shared the video on the cash book. I hope we have gone through that. And then there was also something on business structures. Has anyone gone through the video on business structure and cash book? Would anyone just confirm to me? If you have, say yes. If you have not, say no.
No.
Okay. Cash book, yes. Business structure, no. All right. All right. So cash book, we have not gone through the video of cash book. We've not gone through the video of business structure. And I think this is what I'd asked that we go through. So we need to prioritize those two videos. Okay, I will not repeat them here since we have the videos. But what I want to share with you today is I just want to be able to build onto what you have been going through, the different topics and what we are yet to do to feed into preparation of financial statements, because I want us to take a lot of time when it comes to preparation of financial statements. So earlier on, I think one of the things that I kept on sharing with you, okay, business structure couldn't open, unfortunately. Okay, let me just try to check and see here. So basically, business structure lays down the different forms of businesses that we have in Uganda. And by forms of business, we know we have businesses that are run as sole proprietorship businesses, but we also have businesses that are run as limited liability companies. Not only limited liability companies, but we also have businesses that are run as partnership. Okay, let me just try to check here something small. If this tries to open. So I'm just trying to check. Someone has commented that the video for business structures does not open. It should be able to open. Okay. It's okay. I can be able to comment about it here. So what I was trying to say that when it comes to business structure, I said we have sole proprietorship businesses. We have limited liability companies. We have partnerships. We also have non-for-profit businesses, among others. So the reason why it's important for us to understand the different forms of businesses is because we want to understand what are some of the importances of each of them or advantages of each of them against others. So we know very well that for sole proprietorship, these are usually one-man businesses, okay? These are usually one-man businesses, and it's mostly they employ family members, and also starting them is also very cheap, or it's easy to start them than any other form of business. Why? Because they require less capital. They do require less capital. That at the end of the day, as well, you don't have a lot of legal requirements when it comes to sole proprietorship businesses. It's not like the way limited liability companies are, where you have to register with Uganda Registrar Bureau. You can just wake up and be able to own a sole proprietorship business, okay? So what exactly we study in there is that running sole proprietorship businesses is a bit easier, like we said, compared to any other form of business. So if you're looking at aspects of, let's say, advantages, you're looking at aspects of things like easy to start, okay, less legal requirements, and so on. Now, I just want to show you before even we get into the business structures, as I try to explain each of them, I just want to show you a basis of whatever we study. Now, whatever we study, especially when it comes to financial accounting, whatever videos you're actually looking at, they've come from the syllabus. And this is how the syllabus looks like. I shared a copy of the same on the WhatsApp group. So when you get down to the syllabus, you get realize that business structure is one of the topics that we'd have to look at, okay? And as somebody right now who is preparing for this paper, it's very good for you to create a check and see that you're trying to cross-check with the syllabus to see that you have made progress. So business structure, this is the topic that we are trying to create focus on. As you can see right here, it's a second topic, but we can be able to cover this at a later stage. I usually want us to first have an understanding of some of the other concepts before we can get to business structure. Now, forms of business entity, which is the same thing as business structure, is very important for us as accountants also how each of these business entities operate. Then we are in better capacities to even help them prepare financial statements. Because as financial accounting as a paper, its most focus is around preparation of financial statements, key understanding of how we can prepare financial statements for sole proprietorship businesses, how we can prepare financial statements for partnerships, how we can prepare, let's say, financial statements for limited liability companies, public and private limited companies, and so on. So it's very important that you understand how each of these different forms of business entities work. So sole proprietorship businesses, like I said, these are usually one-man businesses, and usually started with low capital, and the procedures for opening up such businesses are very easy compared to any other form of business. And of course, these businesses are at a small scale, so they require a small amount of capital. So that made tackle on the aspect of the meaning, basically for you to understand what sole proprietorship businesses mean. But the ethics of usually have, let's say, they started by one person, usually have low capital. The registration procedures are also not very detailed like for any other businesses. When it comes to employment, they employed, for example, like family members and so on. So that could form into aspects of ethics for you to basically just appreciate what are some of the ethics of such businesses, okay? And then one of the things that we understand when it comes to aspects of, let's say, benefits and limitations, we need to understand that if you're running a sole proprietorship business, what are some of the benefits? One, we've said it is easy to start. Means that tomorrow you can wake up and be a sole proprietor compared to, let's say, any other form of business where you have to go through the different processes. Or these also require low capital, means that you don't have to pull huge sums of money for you to be able to start such a nature of business, and so on. You can be able to also look at, they also, their labor is cheap because they usually deploy, or they usually leverage on family members. These businesses also, when it comes to taxes, these businesses are usually protected by government. For example, in Uganda, such businesses pay taxes under the presumptive tax system. So it's one of the benefits that you can look at, of course, and several other benefits that come with running such a business. Of course, we know that with limitation, just look at that shopkeeper who is in your neighborhood. What are some of the limitations that they face as a business compared to any other form of business? Because a sole proprietor, yes, it is easy to start, but you find that they will miss out the advantages of people that come into a partnership, because this is one person who is running this business. Means that everything that runs the business is based on their knowledge, is based on their wisdom. So in terms of quality of decisions, the decisions are made based on their knowledge and based on them. So they limit themselves from having other people being able to, let's say, provide them with ideas and so on. And then also these businesses being at a low scale, they cannot easily employ professional staff. These businesses also face challenges of sustainability. Usually they depend on the life of the owner. When the owner is gone, these businesses don't sustainably move to the next generation. So that is one of the aspects that we face when it comes to sole proprietorship businesses. These businesses also struggle when it comes to accessing, let's say, funds from banks, because they don't prepare proper financial statements. They also have challenges when it comes to aspects of being able to, let's say, they can't issue shares like any other form of business, for example, limited liability companies, because they're not listed on the stock exchange. They just run business the way they are. They are not. They don't have legal structure, so they cannot be able to stand as they are on their own. And also, there is one of the key limitations, especially to sole proprietorship businesses, is aspect of limited liability. What we mean by limited liability means that in situations where we have, for example, maybe businesses have either legal actions against them, or they have liabilities that they need to settle, the owner is not protected, because the owner cannot be separated from the business. Since it's a sole proprietorship business, means that if the business has challenges or loans, the owner's property can actually be used to clear some of these liabilities. So that aspect of limited liability is very key, and it's one of the limitations that comes out very clearly when you're looking at sole proprietorship business. So that should be able to give you a gist of what sole proprietorship businesses are, what the ethics could be, what are some of their benefits and limitations, so that you can be able to understand that if I'm an accountant and I'm helping, let's say, such a business to prepare financial statements, these are the areas that I need to be looking at. Such a business will not have enough financial information. So I may need to use, let's say, maybe single entry system to be able to capture this, so you can be able to provide necessary professional guidance accordingly. Now, I just want also to comment about partnerships, which is also another business structure. Now, partnerships, just like sole proprietorship businesses, partnerships are a bit different, because these usually involve one or more, basically two or more people that come together in a partnership, and they are usually called partners. For example, myself can be able to come together, let's say, with Michelle, with Anna, with Asimwe, and including Musa, and be able to start up a partnership. Partnerships in Uganda are very common when it comes to audit firms. Most audit firms run under partnerships. Now, with partnership businesses are usually governed by a partnership deed. There's what they call a partnership deed. The partnership deed is also called a partnership agreement. So a partnership deed lists down how the different partners are going to work together. So it will highlight how the partners will share profits. It will highlight how the partners are going to manage conflict. It will highlight procedures for admission of a new partner. If we are partners and want to admit a new partner, some of the procedures that we have to go to are usually highlighted in the partnership deed. One of the other things that also comes into hand when it comes to partnership deed is the aspect of losses, sharing profits and losses. If we make profits, how are we going to share the profits? Are we going to share equally? Are we going to share to a ratio of 2:1, 2:1? Are we also going to, you also able to make decisions on either you're going to employ a partner within, let's say, the partnership, and is this partner going to take a salary home? So all those details of how you're going to work as a partnership are usually highlighted in the partnership deed. And most of the reasons why it is so, it's reduced on the conflict that may come in, because this document acts as guidance where you have such challenges. So that is what happens with partnerships. Now, in terms of course, ethics, like we said, two or more people coming together. Partnerships are also, of course, even as we get to look at also the benefits, very similar. The benefits is the aspect that because it's two or more people coming together, there is a combination of knowledge and understanding of ideas from all these different partners compared to if it was a sole proprietorship business. So these partners are able to bring ideas together and able to work together for the best of the business. On the aspect of also, when it comes to, yes, partners share profits, but they also share losses. Where, for example, business makes a loss, it's not only one person who bears the loss. All the partners are able to share the loss as well, just as they share the profits. So that's also one area that you need to understand when it comes to, let's say, the benefits. One of the other things that also happens with partnerships is that they are more sustainable in sustainability, in terms of they can exist beyond the life of just one partner, because if one partner, let's say, dies or pulls out, this business can still continue. Now, partnerships are also one of the other advantages that may also come with it is that when it comes to partnerships, they pull capital together. So, for example, if I'm pulling 2 million and Michelle is pulling 4 million, Musa is bringing 5 million, and maybe Maureen is bringing 10 million. At the end of the day, we have a lot of money put together that can be able to run the business compared to a sole proprietorship business. So it's very important that we appreciate the benefits of a partnership. Of course, partnerships also have limitations in themselves. Now, you can see that the limitations of partnerships, some of them are advantages of sole proprietorship business. If today we are running a business and we are partners, myself, Michelle, Musa, and maybe Maureen, one of the limitations is this delaying decision-making. Means that I have to first consult Maureen, I have to first consult Musa, I have to first consult Michelle, for us to be able to come up with a decision that we've agreed as partners. So there's delay in decision-making. Although there's quality decisions, there's delay in decision-making. One of the other limitations that also comes with partnerships is the aspect of conflict. Usually there's that conflict that comes with, that might come with when two or more people are working together. And the other that you can also look at, the limitation is that the profits are actually shared between the partners. Now, this may be an advantage on the other side, but one of the things that you need to look at as a sole proprietorship business, me, a sole proprietor entrepreneur, I'm going to enjoy my profits 100%. If today we made 100 million and I'm a sole proprietor, I'm going to enjoy the whole 100 million myself. But if we're in partnerships, I'll have to share this amount of money between the different partners. So that is very important to understand when it comes to limitations. Now, one of the other limitations that you also need to take home is that these partnerships also are like sole proprietorship when it comes to aspects of liability. Now, we say that sole proprietorship businesses don't have, basically, they don't have limited liability. Now, I think you've seen businesses that have the word LTD on them. Maybe some Ibanda and Investments Limited. Now, that word limited is not just included for maybe as per se just for decoration. The word limited is included for reasons of ensuring that the person who deals with such a company understands that this company has limited liability. So if the company has limited liability, means that whoever deals with such a company knows that they are dealing with the company, they are not dealing with the individuals. Now, that is not the aspect with partnerships. Partnerships usually have unlimited liability, which means that the partners of the business are personally liable whenever there is a less liability. If the partnership was winding up and the partners needed to be able to pay maybe outstanding liabilities, they are usually liable. Of course, as we go on, we shall be able to understand that when it comes to partnerships, usually the liability is shared according to the share ratios, in terms of basically in terms of the capital contributions. They usually have partners usually have ratios that they use to share, let's say, profits and losses, and also meet liabilities. So that is very important when it comes to aspects of, let's say, limitations. So there are other limitations that you can think about, but that's just to give you an understanding. One of the things that I believe is that once you understand what a form of business entity is, you don't need even to cram some of these things, because just as I'm trying to share them, you just need to understand this is a sole proprietorship business. What could be the limitations? And then you're able to bring them out even for the examiner, just in case such a question is asked, okay? So when I was trying to explain sole proprietorship businesses and partnerships, I've been commenting about the word limited liability. Now, limited liability, these are the companies that you see with the word LTD on them. And usually these companies can either be public or private, just as we see here. Now, I just wish to explain something small here. Now, the word limited liability is, of course, from two words, limited and liability, which means that whoever is dealing with these two companies or with this company that has limited liability needs to be aware that this company is a legal entity on its own, and therefore it can operate, it can take decisions, it can acquire loans as its own, it can be able to do several things as though it was an individual. Now, what this also means is that in case of liability, the company meets its own liabilities. I'll give you an example. Some of you that maybe have studied somehow of how our economy has moved from the past. I think you must have heard about a bank called Crane Bank. Now, Crane Bank was owned by one of the who is Sudhir Paredia companies, in addition to Crane Bank that he was running at that point in time. Now, Crane Bank had financial challenges at that time, and I think through the different procedures, Bank of Uganda proceeded to close down the bank. But at that point in time, of course, there were different aspects that did happen. But I want to tell you that during that time, none of the assets of Sudhir Paredia was touched on, assets that were outside Crane Bank. So basically, Crane Bank was a standalone company on its own. And that means its issues were dealt with as a company on its own, not other companies for Sudhir Paredia. So when somebody opens up a limited liability company, they're basically saying that this company is on its own and I am on my own as a business owner. So that's why we call it limited liability. Now, it's not a no liability business. Doesn't mean that the owner doesn't have an obligation, let's say where maybe business is winding up. The reason why they call it limited liability means that the owner's liability is only limited, okay? I want you to pick this very clearly. The owner's liability is limited to the owner's capital contribution. The owner's limited liability is limited to only their capital contribution. So if the owner contributed, let's say 20 million or 20 billion, that is the extent to which the liability, they have a liability in case maybe winding up or a company is going into solvency, okay? So that is what exactly this word limited liability. So that's why it's limited liability. So it's very important. So understanding that, the meaning of limited liability, in terms of ethics and forms, one of the key things for you to understand is that a limited liability, like we have said, is a separate legal entity That is one of the key ethics, is a separate legal entity. And that is why for such companies, they pay taxes as companies themselves. They usually have the corporate tax, which is 30%, that is paid as for these companies. Okay, so that is very important to take keen interest in. Now, such businesses also, one of the other ethics is they're usually formal in nature, so they can be able to afford employing corporates like you. They can be able to, they have strong financial systems in place. Such businesses can also be able to acquire loans, let's say from the bank, because of their formality. Such businesses also have the capability to extend their life. Basically, they can continue to exist even beyond the life of the entrepreneur, because they are limited liability companies. So that is very important for us to take keen interest in when it comes to limited liability companies. Now, one of the things that I also said is that limited liability companies can either be public or private. Now, I just also want to take some time on this aspect, public and private. Now, public companies, okay, are usually companies that are listed on the stock exchange. Now, in Uganda, we have what we call the Uganda Security Exchange. It's basically, it's called USE. And usually this is where different financial assets, shares, and so on, different companies basically list. If you're somebody who watches, let's say, news, you have seen, you usually see when it's time for business news, they usually speak about companies and how they are performing, able to tell you how shares have been able to move. But not even to take you far. Last year, we saw MTN do several drives while it was listing on the stock exchange. I think Airtel will also be listing maybe in about a year or 2 years to come. But what does it mean for a company to be listed? It means that MTN previously was a private limited company. But when it lists on the stock exchange, it now becomes a public limited company. Now, public limited companies usually pool resources from the public in terms of shares. I know some of you might be shareholders in now MTN. Before MTN, the other company that also did the same drive was called Cipla Chemicals. Also did the same drive and was able to list on the stock exchange. So companies that are listed on the stock exchange are more like owned by the public. So people own shares in such businesses. And usually what happens with shares that are, for example, owners that are on the stock exchange, for example, if you own a business, maybe if you own shares in Stanbic or you own shares in Umeme, you can just trade your shares without even having to consult with the other shareholders. Basically, the shares are traded like goods. Today, if you have shares in Stanbic, you can be able to sell those shares to another person. So ownership can keep changing without any much limitation. So that's what happens with private public limited companies. Now, private limited companies are mostly companies that some of you are either running or your brothers or sisters are running, which are private in nature, just like the way you call it private in nature. Now, these businesses that are private in nature are usually run by individuals. And these don't need to, are not required to, let's say, list on the stock exchange. Their shares are managed privately. Now, one of the other ethics that I will also share with you when it comes to public limited companies I think you've bought newspapers and you have seen some financial statements in newspapers. Public limited companies are required by law to list, basically to share their financial statements publicly. So they will publish this in the newspapers and you'll be able to access them. Now, again, I want to put a disclaimer that not every company that puts their financial statements in the newspapers is a public company, because we also have other regulatory requirements. For example, banks are also required to publish financial statements in the newspapers. So other than banks, any other organization, any other company that you see publishing financial statements is more likely to be a public company. Public limited companies are usually so much in this scrutiny of government, because these are companies that take public resources. Of course, government can also invest in public companies. One of the public companies like New Vision, one of the majority shareholders that we have is government. In New Vision, we also saw NSSF as one of the major shareholders in MTN. So we can see that government is also is usually an investor in some of these companies. So it's very good for you to know the differences between private, public companies, as well as being able to understand some of their benefits as well. Okay. Of course, public limited companies, opening them, it is not just a walk in the park. Basically, it requires you to, there's what we call a prospectus. Usually, before any company lists on the stock exchange, they are required to share a prospectus. And the prospectus basically gives information about the company. Now, the prospectus is to help investors, any potential investors, any people that want to invest in the company, to learn more about the company before they can invest. So it's a requirement. So that whoever is investing in, let's say, investing in any company, let's say MTN, they need to be aware of where they're actually investing. So that's why you see that during the time when MTN listed on the stock exchange, they took their time to make sure that they publish this information just to tell the people about how they are performing. Okay. So that is very, very important for you to appreciate. And that's why you see, like I said, they also share their financial statements with the public. Why? Again, they do share those financial statements because they want to make sure that the public knows how they are performing as a business, because they are obligated to be able to provide this kind of information. Okay. So that is very important for you to take in interest in. I've tried to just share with you. I've seen some financial statements here for MTN. So I've just shared it on the WhatsApp group for you to just appreciate why these people shared some of these financial statements. Okay. So understanding that, you can be able now to understand what are some of the advantages of a public limited company. Public limited companies, one, they can easily access less loans from the bank. They can also easily be able to access huge sums of capital. For example, MTN listed on the stock exchange and they generated billions of money from the public. Even somebody who had 100,000 would invest in MTN, and this was done legally, because legally they can be able to do that. So it's very important that you understand some of these advantages. Now, the other advantages, they also, because they are huge, they also can be able to afford to pay salaries for corporate individuals. So they can afford resourceful individuals in resourceful staff to be able to help them be able to grow. These businesses also, because they are also listed, and they also they have enough capital, they can be able to also remain in existence forever might be an exaggerated word, but these are businesses that continue to remain generations to generations. Stanbic has been in place for years and years. Uganda Clay is one of our first companies to be listed on the stock exchange. It has been in existence for a long period of time. BAT, British American Tobacco, has been in existence for a long period of time. Why these companies do this is because they are owned by the public. Several people have put amounts of money. So even if one shareholder, let's say, dies, it doesn't affect the business. It continues to run and remain in existence. So that's very important when you look at aspects of, let's say, public limited companies, okay? Now, of course, private limited companies, somebody may also ask, what are some of the advantages of private limited companies? You've seen people who, if today woke up and went and opened up a private limited company, one, private limited companies have their privacy, just like the way they call private companies. They are not obligated to present their financial statements in the newspapers. No one is actually requires them legally to present these financial statements. So that's an advantage in its own. But like I said, limited liability companies have their separate legal entities. So they have limited liability. So whoever is owning up a business that is limited liability, one of the first advantage to think about is the aspect of limited liability. Means that in cases of insolvency and so on, this person doesn't have to, their property, personal property doesn't have to be touched because of a business that are going into insolvency because they are shareholders in this company. So that independence is one of the advantages that people look at. And then, of course, other advantages also being able to remain in existence. These are businesses that you can be moved, transferred across different generations. These are also businesses that also pay low. Okay, as you study taxation, you understand that if you're running a business, if you're paying taxes as a business, as a company, you can be able to leverage on the tax system and be able to pay a lower tax compared to if you were paying taxes as an individual. Why? Because businesses usually have what we call allowable deductions. You remember, for businesses, they are charged based on profits, okay? All right. Thanks very much for being patient. Sorry, my network pushed me out, but I believe that you can hear me very well. So I was trying to just explain to you the public-private limited company, and I was trying to share more about advantages and disadvantages that you can be able to think about. I'll be able to share with you maybe written text that you can be able to use to read more about the private, public, and limited companies, and be able to appreciate how these operate. I don't know if at this point in time, if we have any questions on maybe this that I've shared with you, or any other aspects on financial accounting. Any questions? Have you been able to understand these different forms of business? The difference one I've been able to share? Can I just get some comments in the chat box? Yes or no? And if you have a challenge, then you can tell me to maybe elaborate on any. Can I be able to hear from people who have been following? Just drop it in the chat box. You don't have to unmute. Just say yes, I'm following. Okay, so Michelle says yes, it's clear. Okay, that is very good. Okay, so I believe that it's very clear. Now, like I said, that you might ask yourself, why do we study these different forms of businesses? And why are they important? Now, remember, we are doing financial accounting. And financial accounting requires us that we are going to be able to prepare financial statements at the end of the day. So like I said, reason why we first understand these businesses is that even when you're working with them, for example, if you're doing partnerships, because we have financial statements for partnerships, you can be able to know that when I'm doing for partnerships, I'll have partners as part of, let's say, maybe partners capital contribution under my balance sheet. I'll also, when I do, let's say, my statement of P&L, I'll be able to, let's say, share profits. I'll have to do appropriation of profits for these partners at a point in time. So that is very important for you to understand. And of course, as we proceed, this will actually come into reality for you, okay? So that's why we study and understand this, to be able to understand how we can prepare financial statements. Now, the other that I've not talked about is the non-for-profit, not as a form of business, because we know that non-for-profit are actually, these are actually, they are not basically businesses that are being started for profit reasons. So it's a form of okay, it's basically another form of how organizations work, where the objective is not to generate profits, but rather to let's say to look at other social causes. For example, we have NGOs that are on education, NGOs that are focused on aspects of say maybe health and so on. So that's what the NGOs usually operate. Now, why I brought in non-for-profit is because one of the things that we should also be looking at is that we prepare financial statements for non-for-profit businesses, okay? We prepare financial statements for non-for-profit businesses. And it's very important as an accountant that you also understand how non-for-profit businesses also operate. As we proceed, we will understand that some non-for-profit, although are called non-for-profit, they sometimes also run profitable businesses. For example, a school that is non-for-profit, okay, school may not be a good example here, but let me say maybe a hospital or a church. A church can run a canteen that can be able to generate some money to facilitate them. A sports club can be able to run a business. It may be a restaurant, maybe KCCA restaurant for the KCCA football club. So you'll be able to understand how all those come into play and what exactly you need to do. So I think you've seen how I have followed my syllabus just to provide you guidance here. Is the same thing that you need to understand when you look at each of these other aspects that are on this course outline. You need to be able to elaborately understand each of the item as its own. So you can see, for example, after forms of business, we have this part of the accountant, okay? Now, we know very well that we have an Accountants Act as Uganda. The Accountants Act governs the way we work as a country when it comes to the accounting profession. So the Accountants Act goes on to define who an accountant is. I know some of you are part of this call and you regard yourself as accountants. Now, if you regard yourself as accountants, you need to understand who is an accountant according to the Accountants Act. One of the requirements is for you to be an accountant, you should have finished the Certified Public Accountants Qualification, the CPA course, before to be called an accountant. So you need to understand what's the meaning of an accountant. You also need to understand a professional accountant as per the International Federation of Accountants, okay? Maybe I'll be able to share with you some of this information. We also need to understand the role of accountant in sustainable organizational success. What do accountants exactly do that support organizations to remain in existence years over years, okay? You know very well that as we provide information to businesses for decision-making, we're able to support in reporting, and this reporting provides also information to, let's say, other stakeholders like investors, government, maybe other regulatory authorities as well, to be able to know how the business is performing, but also to be able to regulate it as well, okay? So this is also important. So this is one of the areas that we also be able to tackle as we proceed. Then we have this other element of International Financial Reporting Standard, which we shall also be able to handle on its own. But I just want to show you what we've been able to tackle. So when it comes to the accounting equation, the double entry, the bookkeeping, the debit and credit, the cash book, this is all we have covered. At least right now, I expect you that this topic, as you can see trial balance, preparation of trial balance, preparation of bank reconciliation, at least up to here, you should have covered all these things. This topic, we took a lot of time on it, okay? We took a lot of time on this topic, so you should have covered this topic. Whatever is here in this topic that you don't know, make sure you drop a message on the WhatsApp so I can be able to know, because I may not be able to repeat anything in this topic. On our syllabus, it's called Principles of Double Entry. Okay. Now, and our next focus, this is the area where I was told part one of the video was corrupted. Okay, so I'll be able to provide you with I think the next session, maybe my focus will be on this area that we can be able to go through, so that you can be able to understand that first part. And then we can be able to now to jump onto the preparation of financial statements. And then we shall do the preparation of financial statements for some time and be able to now to tackle the individual topics. But one of the good things that I usually tell my students is that you have all this information. We have this information. We have the videos. But then I think I realized that once I save videos, most of us don't take the video, we don't go through the videos individually, okay? Usually want, let's say maybe me to post a video and then you go through the video, okay? So I want us to make sure that we can leverage some of those videos that we have to go through all this information, because right now we have a very limited time. I also shared with you a handout on entrepreneurship. Take time, create some time and go through this entrepreneurship as a handout. I shared it. And in a couple of days, I also continue to share more materials. Please go through this information. Go through this information so that you know very well that at the end of the day, you're covering the syllabus substantially, because October is nearly gone. We're just 16th of the month, means the month is gone, okay? November will come and we'll go and we shall be limited, okay? So I want to create more time again for you, other than us having the session on Sunday. I want to see if we can be able to create some time on let's say, I don't know how Thursday is. I want to see one of the days of the week. Now, it may be any of the days. So I want us just to maybe be active on WhatsApp here a little more. But standardly, we can try to do Thursday. Are we occupied on Thursdays? Is any one of you occupied on Thursdays? Because I see those that do management accounting, the lesson is on Wednesday. Any of us here that are occupied on Thursdays? Okay, Thursday is okay. Michelle says Thursday is okay. Anyone else has said Thursday is okay? I want to see if we can create some time on Thursday. But it can also be Wednesday, depending if okay, Wednesday, since you're busy, that's okay. But the day was Tuesday, but I'm seeing Tuesday to be not very far from now. But any day of the week where I have some time, I'll just jump in and let you know that we shall have a class. Let's make sure that we jump on so that we can be able to cover some of these things very fast. But also, I implore you to take some time to go through all the things that we have gone through, so that you position yourself to pass this paper, because if you don't, you actually fail the paper. So you have to make sure that you create some time to go through some of these things. So I see Thursday is okay for most of the people. So we can try to see if we can have a session on Thursday. If all goes well, I'll be able to create. I may not commit that it's every Thursday, but I want to see if my work is able to give me some flexibility. I'll try to ensure that maybe on Thursday we can have a chat, even if it's a 1-hour class, but then since we can be able to pick up something from there, okay? Yeah, so that is what I wanted to also share with you. But let's make sure we go through some of these videos. I'm going to maybe copy them. I think some of you struggle accessing them directly from the link page. So I'm going to just copy and paste the link directly, okay, within the WhatsApp group, so that you can be able to go through these things. Let's make sure at least we create time. Those who have not gone through the cash book, go through. Those who have not gone through bank reconciliation, go through the bank reconciliation. And then other things I'll be able to share as we proceed, okay? Yeah. So it's just a few minutes to the end of the class. I want to see if we have any question. Then I can be able to take that question and then we can call it a day. But as we end, I want us to make sure that we go through there is also this these revision videos. Make sure you can also go through them where you have some time. For example, bank reconciliation had 2 videos on the revision one. Make sure that you go through some of them, okay? Yeah. So I don't seem to see any question coming through here. And I'll basically be able to leave this at this. Okay. Okelo says, could you throw more light on how to prepare trial balance? Okay. Okay, maybe this is something that I'll be able to maybe able to provide more light, but let me just try to do something small here, and maybe this could be our last thing, and I can be able to utilize more. Now, one thing that I say that we draw the trial balance. We usually draw the trial balance usually after what? After the ledgers. So the trial balance is basically a summary of ledger balances. A trial balance is usually a summary of ledger balances. Now, what that means is, for example, if I have a ledger, let's say called cash book. Okay, let me call it cash account. So I have a cash account. And then I can also have let me have motor vehicle. Let me also have, let me have capital account. So if these are your respective accounts, I believe you know how to balance off your accounts, okay? For example, if you have, maybe you had sales of 10,000 here. You had purchases of 5,000. Maybe you had a loan that came in of 20,000. That could be your cash account. Motor vehicle, you can have all right, thanks very much. So I was on the cash account and I was saying that, for example, if you have sales loan on this side and then you have your purchases this side, okay? So we understand very well how we balance off this account. We say that the side that has a lower, you compare the side that has 30, the side has 5,000. The side that has a lower amount usually has what we call a balance carried down. This balance carried down really represents the difference. This is 30,000, this is 5,000. So the difference is 25,000. So at the end of the day, you have your total as 30,000. And here is also 30,000. So these are our totals. So if these are our totals, we also usually have a balance brought down of the same value as what we put as a balance carried down, 25. 25,000. So this 25,000, this balance brought down is what goes to the trial balance, okay? So you usually have your trial balance here. Usually trial balances have account, or you can call it detail. They usually have the debit. They also usually have the credit. So for example, if we have gotten our balance for cash, we shall just come here, write cash. Since the balance brought down is on the debit side, we shall come and write 25,000 on the debit side. Shall come and write here 25,000. Definitely you should have a heading for it. Type of the business, and then you say it's trial balance, okay? So that is what you're going to have. If, for example, you had, I believe now you know how to balance off. If your balance brought down for motor vehicle based on whatever you have in this file, let's say balance brought down was 10,000, you come here and say motor vehicle, you give it 10,000 right there, okay? Now, in case capital usually has a credit balance. In case you had capital, maybe this was cash, this was 45,000. So means that when you get the totals and so on, still your balance brought down will actually be on this side, since this is the side that is higher, okay? Because this is, the total is 45,000. And our balance carried down is actually here. But this side didn't have anything. So this balance carried down is on this other side. So if this is the case, just try to reduce this. This is 40, should be 45, not 450, sorry. So if this is the case and this is the balance brought down that you have, when it comes to your trial balance, means that capital will be on the credit side, since the balance brought down is on the credit side. So it means that when you come here and write capital, 45 will actually be this side. So you do that for all the ledgers. And at the end of the day, you should have a summation of this side, the total debits and the total credits. If you have put all the information in here, usually these two balances will balance. For example, if there is no any other information, much like this may be 335, so you see you always have these values balanced, and that's why it's called a trial balance. So it has a column of debit and has a column of credit. And then you usually have the account, specific account, where these values are coming from, is what you indicate here. So in summary, the information that goes in the trial balance comes from the ledgers. And what is exact information do we take? We take the balance brought down. So where the balance brought down is, for example, here the balance brought down is on the debit side, is what exactly what we do give here in this account, okay? That is why when it came to capital that had a credit balance of 45, when we came to the trial balance here, we wrote capital and put the 35 or 45 this other side on the credit side, okay? So that is how you would come up with your trial balance. So as long as you know how to balance off your ledgers, the trial balance just is a list of balances that are coming from the ledgers, okay? So I hope that, Justine, is that clear?
Yes.
Okay, fine. Thanks. I believe it's clear for other people as well. Patrick said about companies, URSB introduced single member company. Can you throw more light? Okay, that is URSB. But what I would say is, of course, single member companies, previously, URSB would limit people to register companies. If, for example, you a single shareholder, but these days you can register a company with just a single individual, but means that you have to, on your name, basically your name needs to highlight that. So that's anyone who deals with such a company is able to be aware that they are dealing with just a single individual, okay? So that is what happens with a single member company. So they usually started by, it's one director basically. A single member is usually one director. It's a single member company, okay? It's a private limited company, but it's incorporated by one member. Now, the difference between a single member company for URSB and the sole proprietorship is that single member companies are like the way private limited companies work. So for them, they have limited liability and they have their separate legal entities. Well, sole proprietorship businesses, for these may not be registered, okay? May not be registered businesses. So that's very important for you to distinguish between the two, okay? So that is what I wanted basically to share on that. So I hope we don't have any other question that has come through. I don't see any question in the chat box. In case we have any other questions, let's keep those questions coming on the WhatsApp group. You don't have to wait for the class to ask those questions. I think some people have asked questions and have been able to come out there and share. And then let's ensure that we go through the videos, even for the things that we've not handled. If you have some time, go through the videos, okay? Yeah. So I want to conclude this class from here, and I want to wish you all the best. I'll be able to communicate our next class. I'll be able to share the link when I'm available, especially maybe on Thursday, and then we can pick it up from there. Otherwise, much appreciated for all those that have been able to join this live, and for those that are also joining this as a recording. Appreciate your time. So thank you, and have the best in the rest of the day. Bye-bye.